Well, folks, for 2 months straight, the stock market really focused in on tariffs, and we've heard nothing about it for 2 months straight. Well, folks, I'm here today to announce we are beginning to turn a page. Yes, I posted inside my private stock group here this afternoon. I said this week marks a transition week. We grind down caring about tariff drama and what the White House is doing, and we start focusing on earnings. Next week, in the following 3 weeks, we are getting an earnings gauntlet. Get ready to rock and roll. Yes, earnings are coming here. And as far as the tariff drama, in case you missed it, in case you were asleep, February 19th through the first week of April, the NASDAQ fell around 24% range in that amount of time, which is a pretty incredible fall for the NASDAQ in such a quick amount of time like that without some sort of banking crisis or something like that, right? So we had a major correction that almost turned into a crash. Almost. Like, it was very close to the NASDAQ turning into a crash, and obviously we've had a lot of changes on tariffs and kind of what's going on here from there. And so in regards to tariffs, we have now reached a stage where we are beginning to get some level of certainty. Now, that we've got a lot of certainty to get. We're at the very early innings of that, but in terms of the maximum amount of uncertainty, that is now past. Everybody has to understand that watching right now. That segment of the max level, worst case scenario, max case, like we're so uncertain on what's going on, that's past. Now we're at the phase where things are starting to slowly be figured out. And so you got to understand when you're already past the worst part, now we're going on to a new phase now at this point in time. That's going to be worked out over months. This is not going to happen in a day or a week or something like that. This is something that's going to happen over the next several months. So in this video, I did a lot of reflecting this weekend, and I was thinking about how I want to invest for the remainder of 2025. And I'm going to share that with you guys in this video here today. What are the new stocks I will be buying for the rest of this year, essentially? Where am I looking for the best opportunities? Okay, because we gotta be honest. Like, things have changed. What has transpired here? It's got to change a little bit about the way you think about investments and the way you think about risk whenever you go into making an investment, as 08, 09 did and other time periods like that. By the way, I appreciate everybody joining me as always. Thank you so much for being here. One thing only I need from you guys is for you to smash that like button. I hope you guys appreciate me showing up, in the bear markets, the bull markets, and the kangaroo markets for you. And I always share my opinions, perspectives, and where I see the next opportunities being in the market. And that's what we're going to be getting into this video here today. And also, if you want to look to apply to join my private stock group, get access to all my premium course curriculums, private Discord chat, 1000xstocks.com, all that good stuff. Pin comment down there, click on that, fill out a form, see if we can get you access to that a little later on this week, okay? Alrighty, so it's very important I start in 1989. Why am I starting today's video in 1989? Well, very important. This is the year I was born, okay? 1989, greatest year ever, right? So listen, what I'm showing you is these stocks' performance since 1989. And what you're going to see is Walmart's up around 8,000% since I was born. Costco's up 44,000% since I was born. And Apple's up 54,000% since I was born, right? And I'm showing you those three companies there because those are three of the most famous companies in the world, right? And if my whole entire life, all I've ever known is made in China, right? I mean, I think I was probably a 10 years old, 9 years old, something like that, when I started to finally realize, I would look at the back of my toys and, or the bottom of your toys, and you could see like where it was made, right? And I noticed like, everything's made in this place called China. Everything's China, right? And that was when I first started to realize that, right? And it was that way for the longest time. And that helped these companies that make physical products prosper, right? I remember even my dad saying when I was a little kid, I remember him saying, oh, Walmart. He didn't like Walmart for whatever reason. He always disliked Walmart. And he would say, oh, Walmart's just a bunch of made in China crap. That's kind of what he used to say, right? But these companies like Walmart, Costco, Apple, they made billions upon tens of billions, hundreds of billions of dollars over the last number of decades producing all the stuff they really sell in China, right? And you think about Apple even being a tech business, and you think about all the products they've made over the years, right? And where do they make all that stuff? China. And they've over the past 5-7 years, they've started to, diversify out of China a bit. But at the end of the day, like, it all comes back to China, right? And you think about all the products in Costco, like, outside of like the produce and stuff like that and the bakery goods, look to the back of those products and see where those things are made, right? And Walmart, same exact thing. So those companies prosper. But obviously things are changing now at this point in time, right? That even goes to companies like Louis Vuitton. Louis Vuitton just reported their earnings because we're starting to hear earnings out here. And Louis Vuitton, which is a high-end company, right, selling high-end products, even their numbers were down, not looking so good here recently. Leather, fashion and leather goods down 4% year over year. You know, a company like Louis Vuitton, you almost expect to grow every single year, right? We're having, in Louis Vuitton stock was down 6+% here today, even on a green day for the markets. We have major conflicts going in between major countries that we haven't really seen before. If we go back to the time I was born, 1989, all the way through this time, for the most part, major countries, right? Think all the European countries, think the United States of America, think of China. For a long time, they seem to get along very, very well. But suddenly, it's just like all of a sudden there's just so much conflict, and this country is looking at this country and saying, hey, no, we're going to tariff you this, we're going to tariff you that. No, you're taking advantage of us in this way. No, we're giving you this, but you're not giving us respect, right? And you just got a lot of conflict all of a sudden happening at once, but you got to ask why? Why is it suddenly that all this is just happening? Because there's got to be a reason, right? And I'll show you exactly what happens. This is what has happened. What happened was in 2020, when Rona hit, governments panicked around the world. They shut down their countries, they shut down their economies, and they flooded the system with capital, even giving programs like stimulus money and things like that, right? And it blew debt that was already an issue prior to 2020. It blew it to all-time high levels, right? And if you look here recently at public debt to GDP ratios, it's awful. Like, basically, you should never have your debt to GDP ratio over 100%. That should almost never happen. But we are now experiencing many major countries that now have well over 100% debt to GDP ratios, including France, including the almighty United States, Italy. Japan is at a shocking almost 250%. And China might not show up here, but because China hides a lot of their numbers, but I can tell you China is insanely high as well. China's taken out ridiculous sums of debt over the past 20 years to essentially build a lot of major cities. Some needed to be built, and some, honestly, folks, they didn't really need to be built. They're ghost towns. And we're talking they built, major cities that could house hundreds of thousands, millions of people, and they're like ghost towns over there in China, right? And so we have a debt problem. And now these governments are realizing interest rates have also gone up, and they're all like, oh crap, man, like we need money. Like, where's our money at? Like, we need money. We got all this debt. We got to get this situation solved, figured out here. We got to get things under control. And as countries start to realize, shoot, we need to get some money, they start to have conflicts more. And they start to say, this country over here seems to be doing just fine. They're taking advantage of us. They're taking our money. That's our money. They got tariffs on, they got taxes on, they got this and that, right? And that's where more and more conflicts start. When money starts to dry up, you get a lot more fighting. That's just what happens. When everybody seems rich, you don't have that much conflict. You might have competition, but you don't have much conflict because at the end of the day, everybody's doing great, right? When suddenly there's a lack of money, there all of a sudden starts to be big problems, right? And look no different than a very wealthy neighborhood versus a neighborhood that's in a lot of poverty. A neighborhood that's in a lot of poverty, what are you also going to see? You're going to see a lot of stores getting robbed. You're going to see a lot of crime. You're going to see a lot of homicides, right? Go to a rich area. Are you going to see a lot of that? Nope. The biggest conflicts are going to be, oh, my neighbor, how do you get approved to build that 7-car garage? I only have a 5-car. How did the HOA approve that, right? It's different battles. It's more competition, right? But when you take away the money, oh, now things start getting really serious really, really quickly as soon as you take away that money, right? Then the crabs really start fighting. Now, if you go ahead and take a look at one of my favorite websites, usdebtclock.org, okay? What you're going to find here is the debt per taxpayer has ballooned to $323,000. So if you're a taxpayer and you're watching this right now, where's your $323,000? Get ready to give it to the government, okay? $323, that's what you owe if you're a taxpayer. But if you're just a citizen and you don't actually pay taxes, your debt per citizen is only $107,000, okay? So that's all you owe. But the U.S. national debt's out of control, right? And it just continues to balloon. And even with Doge and everything, Elon's trying to do and that whole Doge team, at the end of the day, that national debt, it's going up and up and up. And they're trying to stall it. They're trying to stop it. But at the end of the day, it's a runaway train pretty much at this point in time. So the U.S. is looking for their money. They say, who's taking all our money? How are we $37 trillion in national debt? That's, expected to likely grow to 40 trillion, then 50 trillion, then $100 trillion here, right? Incredible, incredible numbers. Now, if we go ahead and take a peek, because you can actually rewind it a little bit, take a look at where we were at back in 2008, for instance. On this day in 2008, the debt per taxpayer was $92,000. The debt per citizen was $32,000. So, and once again, the debt per taxpayer now is $323,000. The debt per citizen is $107,000. And the national debt back then had just reached $10 trillion for the first time. U.S. national debt now is right around $37 trillion. So we've well over 3x'd our national debt and our debt per citizen, right? So this is an extraordinary time period, and the U.S. is starting to look around and be like, where's our money at? Who's got our money? And to add insult to injury, because interest rates have gone up around the world so much over the past few years because of inflation, that a lot of it came from the Rona crash, right? Interest payments for the U.S. government has reached over $1 trillion a year. So interest payments of over $1 trillion a year. If you know anything about money, right? Interest isn't even solving anything. You're not even getting to the principal. If you got to pay $1 trillion, $1 trillion just to pay off interest, woo, you're in trouble, right? You're in trouble. It'd be like if somebody came to me and they said, I've taken out so much credit card debt that I pay $10,000 a year just in interest payments. I'd be like, oh my gosh, like you're in a bad situation. Do we need to look at bankruptcy? Like what's going on here, right? And so that's how serious things have gotten now at this point in time, right? And then enter Trump, right? And he's kind of the one to really just come in and kind of lay the hammer, right? And, people can say whatever they want about Trump. They like him, they don't like him, they think he's a good president, bad president, whatever. The one thing I'll say about Trump is a man has always been consistent. You could go back and watch old interviews from the 1980s of him, right? Including the interview he did on Oprah the year before I was born, 1988, right? And he stays consistent to this day on the same stuff he's preaching. He was preaching back then, the U.S. is getting ripped off. We're letting everybody take advantage of us. I think back then it wasn't China he was preaching against. I think it was Japan, right? And they dumped their VCRs and their cassette players and all this and that, right? In our country, and they're ripping us off. And so Trump's kind of the perfect person to just kind of like take everything that's been brewing underneath and just blow it up to the top where now everybody sees it, right? And now everybody sees this. Now that brings us into companies, right? Because I can tell you prior to 2018, if you were a global business and you did business all over the globe, so let's say you're an American company, and maybe 60% of your revenues came from the United States, right? But if you did business in China, you did business in Europe, you did business all over the globe, it was seen as you're a safer company to invest in because you're diversified. Your business is all over the globe. You're not just relying on one place to get your revenues, to get your profits, right? It was seen as like you're really good and you're really healthy. But things have changed since 2018. And what has changed is now people look at being a global company as a risk. It's really fascinating because before everybody was just looking at the glass half full and saying, hey, you do business all over the globe, that means you make more money. Now people are looking at your company in 2025 and they're saying you do business all over the globe. It's risky. That's risky. That means you got all problems in this country, tariffs in this country. They're trying to raise taxes over in this country. Now everybody's thinking about the risk that comes involved with that. Because when you're a stock that's valued, right? Everybody's looking at your revenues and saying, well, what if you have to exit XYZ country and there goes 10% of your revenues, right? And we even witnessed this with Russia. When Russia-Ukraine broke out, right? You had companies that did business in Russia that had to close up shop. And for some companies, it was like 1 or 2% of their revenue. For other companies, it was like 3 or 4%. What happens if one day China is just like, you know what? Apple, you're not allowed to sell smartphones in China anymore. It's a national security concern, Like, what happens if that happened? Maybe it doesn't, but what happens if it happens? That's the issue. And that's the risk that now comes involved with doing business all over the globe, right? It's like, what if this country says you're not doing business here anymore, or we're going to tax your product even heavier, even if you make it? Like, we don't know where this thing could go, right? So it's fascinating to see these companies go from being global's good to now being global's like, ooh, that's risky. Like, ooh, boy, you're doing business in that country. What happens if, something happens there and there goes 5% of your revenue from your business model? Now we need to value your company at least 5% less than we did before, if not larger than that, right? But let me tell you guys, this is not just like something that just popped out of thin air. I got the first signs of this back in 2015 because people think like everything that's transpiring right now is brand new. No. You got the first signs back in Macau back in 2015. Now, Macau is a region essentially that is somewhat Chinese controlled, somewhat not. It's a little complicated, similar to Hong Kong, similar to Taiwan. It's a complicated situation. It's very influenced by China, but it's kind of got their own party and their own system a little bit. It's a little weird, okay? But the moral of the story is, in Macau, back in 2015, we got very early signs. In Macau, you look at a company that I really like, Wynn Resorts, right? They have several properties in Macau. And what I witnessed, and Wynn's been a company I've followed for many years and invested into it on and off throughout different time periods. But this is an article I'm showing you back from 2016, okay? But it's looking back at 2014 versus 2015 numbers. In 2014, Macau casino gross gaming revenue, GGR, totaled $44 billion. $44 billion. The next year in 2015, revenue in Macau was down almost 35%, folks. So overcut by a third in 1 year. The clamps were put down. And this was the first telltale sign of like, wow, like China and the US might actually be having some issues. Because China, how China phrased this was they were cracking down on corruption campaigns and, anti-corruption, blah, blah, blah. But at the end of the day, the way I looked at this is Macau revenue was exploding. Companies like Las Vegas Sands, Wynn Resorts, MGM were making a fortune. We're talking billions and billions and billions of dollars, $44 billion. And much of that money was going to American companies that could then go and take that money and bring it back to the United States, right? Or expand in other places in the world. And so that was the first place that I looked and I saw back then China actually taking a policy that was like kind of protectionist in my opinion. Like, oh man, all our rich people are going to blow all this money in Macau, right? We need to put the clamps down on that. And that was the first like, man, like this is a change in direction, because prior to that, it seemed like the US and China just got along great. But then when that happened, that started to change things a little bit. And then things started to get a little more tense throughout 2015, I noticed. And Obama was always seemed to get along very well with China, as well as you could have, being in the United States. And it seemed like as I watched 2015 unfold, and as I watched Obama's last year, it seemed like, honestly, the relationship between the U.S. and China was starting to disintegrate well before Trump was even put into office, right? And so this was like inning one back in 2015, which is now a decade ago, right? Barack Obama. The question is, are words followed by actions, right? There was already like this starting to be this animosity between the United States and China. And that was very, very fascinating at that point in time, right? Now, I don't know if you guys have ever gone down this rabbit hole of, basically there's a belief, it's somewhat of a conspiracy theory, might also be some truth in this, but basically it's a belief that we basically are an oligarchy, okay? I can never pronounce the name correctly, right? And essentially there's very, very powerful individuals that choose everything that happens, right? And they can make you vote certain ways, especially if you're not like dead set on one side. They can, and it's easier to do it than ever because of social media now, that essentially if you are leaning toward a side, they can show you different propaganda pieces that can get you more and more onto one side. So then they've driven you exactly where you want to be. If you're slightly over to one side, they need you to get you over here. They can show you enough propaganda pieces of media and whatnot to get you to say, you know what, I like this. I like this guy. You know, oh man, he's saying things I like, right? And it gives you essentially the illusion of choice, right? And so if, let's say, we want to go down that rabbit hole, right? You could say that in 2016, I think the oligarchs of the United States would look at this and be like, we need a China hawk here, right? And there comes Trump, who had really tried to run for president many times in the past and been a complete failure and was seen as like a joke of a candidate. And all of a sudden, who was the most perfect person if you're the oligarchs and you need to fight off China? The guy that's been preaching since the 1980s that the rest of the world's, taking advantage of us, right? And so, boom, let's plug in him. Rona comes. Okay, now we need calm. Let's put in that B guy, right? He's not going to cause any drama. He's just going to be, you're never going to hear from the guy for 4 years, right? And then 2024 comes, we need our China hawk back, right? So the illusion of choice, you can just put that out there, okay? If you want to go learn about that more, you can learn about that more. I wouldn't, though. I wouldn't. It's a scary place, okay? It's better to just believe that, there's none of that exist and there's no propaganda and there's nothing, your thoughts are your thoughts and nothing's being controlled. It's better to think like that, okay? Because the other part's kind of sad, okay? Now, what also did we learn in 08, 09? We learned that a lot of business models that were very respected, a lot of stocks that were loved back then, right, were suddenly hated, as in cyclical business models. If you look prior to the great financial crisis hitting, people loved cyclical businesses. They loved the home builders. They loved the banks, the financial institutions, right? Then 08, 09 hits, and suddenly everybody's like, I don't want to own cyclical companies. Those are bad. Don't give me a home builder. Don't give me a bank. They suck. Don't give me an auto company. They all suck. And what have we seen ever since 08, 09? Even as those companies' profits, exploded to the sky, does anybody pay any sort of big valuation for a bank nowadays? Or a home builder? Or an automaker? No, unless you're Tesla, okay? That's the one exemption. But outside of that, no one was willing to pay anything for any of those type of companies because cyclical businesses were seen as bad, right? And what we learned from that is you got to stay away from cyclical businesses unless they've already crashed. If they've gone through a 60, 70, 80% crash, then you can pick it up as a 1-2 year kind of, we can call it medium-term trade or a medium-term investment, we'll call it, being in it for 1 or 2 years. But at the end of the day, whenever times look great, you don't want to buy the home builders. Whenever times look great, you don't want to buy the auto companies. Whenever times look great, you don't want to buy the banks. The only time you can consider buying those sort of companies is when they've already crashed 60, 70, 80%. Other than that, they're don't touch. And that's what we learned from 08, 09, right? And a lot of the biggest companies in the world, the smartest business models, they realized after 08, we've got to change our business models to more recurring revenue streams. Because when you go through a major recession like that, people dry up spending, right? And they're not like, I'm not going to go buy a house right now. I'm sorry. I'm not going to go buy this. Not going to go buy that, right? And so a lot of companies prior to that were very focused on selling a product, right? And now if you look at all the biggest, most powerful companies, they're all like recurring revenue stream. Even Apple, right? You really break down Apple's business model and it's like, yeah, they make so much business from selling a new iPhone and computer, but a lot of that is just replacement revenue nowadays, where essentially somebody's iPhone breaks and they just got to go buy another iPhone, right? Somebody's MacBook breaks and they just got to go buy another MacBook because their old MacBook they've been using for 6 years finally crapped the bed, right? And so they're like, oh, okay, I'm going to get a new MacBook. But you really look at the services revenue, which is the golden goose for Apple nowadays, right? That services revenue, that was something that didn't exist prior to 08, right? And then Steve Jobs built the business model and really focused it around like the services opportunity, right? And it's been a game changer for that business model ever since. Microsoft, same exact thing. Like people forget about the days used to pay like a one-off fee for Microsoft's products, right? Not anymore. Now you look at all their products are basically recurring revenue streams that you have to pay for monthly or annually, right? NVIDIA's even trying to go that route of a recurring business model. Like NVIDIA, right, is trying to even go that route now at this point in time, right? Because they realize their business is so dependent upon how many chips they're selling at a particular time and the price points. And so they're even trying to focus their business more and more on software, right? And so it's fascinating to even see a company like that say, geez, we would love to be these other companies, right? Google, you look at a lot of their components of their business, a lot of recurring revenue streams in their business, right? Amazon, even a company like Amazon, right? Think about how much Amazon has changed since 2008. Amazon Prime now is a huge thing. That wasn't a thing before 2008, right? AWS, no one cared about AWS before 2008. That's like a huge component of their business that companies have to stay signed up for AWS. You don't just quit AWS. That's not the way it works, right? And you also think about how much Amazon over this last 10, 15 years has pushed into needs-based products. They want you to order your soap from Amazon. They want you to order your deodorant from there and your toothpaste, right? And all these needs-based products, where if you think about Amazon prior to the great financial crisis, if anybody even used Amazon back then, it was more for like one-off, like I'm going to go buy a CD on there or a DVD or some sort of new electronic or something like that. It was a lot of one-off purchases. And now Amazon's built their business model to be like a grocery store almost, like stable business model, right? And so it's fascinating to kind of see how all this plays out. Now, this takes me to kind of how I'm thinking about investing for the remainder of 2025, right? Because first off, you got to understand, anytime the NASDAQ falls 20+%, it's a phenomenal time to be buying growth stocks specifically. Because usually what happens when you have a NASDAQ go down 20+% in a pretty quick amount of time, right, is growth stocks get hit hardest. And, it's just always the way it is because they trade a bigger valuation. So when people get more uncertain, they come back to what? Valuation. And if they don't feel comfortable with the valuation, they say, I don't want to own it. No, thank you. And so I'll be focusing a lot of my attention definitely on growth stocks, right? Now, I'm going to finish up my buying in April on the beaten down dogs. The beaten down dogs are Nike, Elf, Estee Lauder, AMD, a lot of those companies, right? Now, the special thing with these companies is these companies were already getting hit prior to the big correction, right? Now, the correction comes and just takes it to another level. And so you get certain time periods when, and I could even take you back to the 2022 crash. I could take you back to the 2020 crash. There's certain time periods where you get certain stocks that were already attractively valued, but then they go into, a crash in the market or a major correction, and they just trade down to ridiculous levels because those stocks were already heavily damaged before. And so by the time you get to a crash, it's just impossible to find buyers. And the selling pressure is just relentless. And so that's why a lot of those stocks I just ran you through there, right? The Nikes and the Elfs and the AMDs and those stocks, they're trading at values you just couldn't even conceived of a year ago, right? Or even 2 years ago. It's just like, especially a year ago, like, who could have thought AMD would be trading at, last week, AMD was trading, $80-something a share? Last week, Nike was trading, just ridiculous levels in EL and ELF and a lot of those stocks, right? And all based upon the fears of tariffs and this and that. It's all going on, right? So I got to finish up my buys in regards to those over the next, I got another 2 or 3 weeks to continue to add to those. And then I'm about done as far as buying those because I'll be good with kind of what I own at that particular time. It doesn't mean they're not still a buy. Those stocks are a buy all the way through the end of the year. It's just for me, somebody that's been buying those stocks very heavily, I'll likely conclude my buying here very, very shortly, right? Now, also on my X, I posted my base case, bull case, my updated base case and bull case for stock prices in regards to these three, okay? And by the way, if you don't follow me on X, I always have it linked in the description area of my videos if you ever want to follow me on X, okay? But here's my base case for Nike and bull case for Nike. I have a base case of 125 and a bull case of 175 based upon where I see their net income going over the next few years and based upon where I think they're going to be properly valued as far as P ratio. AMD, and then base case 200, bull case 300. I took down my numbers a little bit in regards to AMD just because I think there's going to be more uncertainty out there over this next bit of time, and that might hurt numbers at least a little bit as far as later this year or 2026. AMD is still going to be posting great growth regardless of all the uncertainty and what's Trump going to do and what's going to be the growth outlook and all those things. AMD is still going to report great numbers. I'm just taking it down a little bit. So still very attractive ROI there, right? Even today, even after the bounce recently, it's still $90-something a share. ELF, my base case is 150 on ELF. Bull case is 250 on ELF over the next 3 years. I think that one's going to bounce hard. Hard. This whole tariff stuff is so overblown in regards to ELF. Oh, by the way, and if you want some other good news in regards to ELF, I actually posted this in the ELF chat. Kramer got asked about ELF on Mad Money. I had CNBC on in the background while I was prepping this video. And I'm like, oh, they're asking Kramer about ELF. This should be interesting. And he was basically like, I can't recommend buying that stock at 53. They got all this China exposure and all the same crap. And I'm like, oh my gosh, they don't even realize like Elf sells these very affordable products that if Elf goes up 50 cents or $1 on it and completely offsets the tariffs, people aren't going to revolt and stop buying Elf products. And it's not the way it works. And so that was just fascinating to see, Kramer basically, preach against Elf. Might be a good sign, huh? Might be a good sign there. Now, as far as May and through the end of the year, right? Now, this is assuming no major market crash. Like, let's say, some massive next black swan event comes out of nowhere, right? And S&P, NASDAQ goes down to the 10, 20%. That could change up some of my opinions, but assuming we have no major market crash for the remainder of this year, here's how I'm looking. I love this stock. Adobe. I haven't started buying it yet, but don't be surprised if I enter the position very soon here. ADBE. Adobe is just so well positioned, in my opinion, right? Here's the deal. We were talking about, international as a risk. Adobe gets 70+% of their revenues from the Americas region. So they're not super reliant on international markets to try to meet numbers or something like that, right? Additionally, it's a growth stock trading at a great valuation right now. I mean, it's valued like a value stock. Additionally, we spoke about it, recurring revenue streams. Adobe's got one of the best recurring revenue streams you'll ever find of any company out there. It's tremendous recurring revenue stream for Adobe. And so when I look at Adobe, I'm like, oh my gosh, would I love to just start a position in this one in the month of May and just build it over the remainder of this year, because that's one I'll feel very comfortable in over the next several years holding that one, right? So that's definitely a stock I'm strongly looking at. Now, in regards to Adobe, it's going through an annoying time in regards to stock price, right? Because everybody's like, all the analysts, when the stock does bad, they start bringing down their price targets, right? And so Adobe's had to go through that over the last week or two. So D.A. Davidson here, they just cut their price target to 450 from 600, right? This one's just today also. This one was by RBC Capital. RBC Capital just took their price target down to 480 from 530. This one was on the 11th of April. They took their price target from 410 to 380. This one, Evercore ISI, this one was last week? They adjusted their price target from 550 to 475. So Adobe's going through that phase right now. And at the end of the day, as a long-term investor, I don't care anything about that. And usually when all these firms are, bringing down price target, usually you're at the bottom, because that's usually the last signs of a stock. At least if it's a good or great company that's going to start to turn things around as far as the stock price goes. Usually, you're at the bottom when it's that phase when all the analysts are bringing down their price targets, because that's usually the final phase. Like, I've seen it just continuously over the years. So that's an opportunity I see. Honest, HNST, I think is a great opportunity as well. A lot of Honest's products are made in where? America. So the tariff situation doesn't hit Honest nearly as hard as it hits a lot of companies. Like, some products, some things they get outside the America, but honestly a lot is United States based. And so needs-based business model as well, right? It's not like, at the end of the day, if you got to buy diapers, you got to buy diapers. If you got to buy cosmetics products, right? And soaps and lotions and things like that, you're going to continue to spend on that. And so needs-based, impressive balance sheet at the company, incredible balance sheet actually, impressive cash flow at the company as well. And so I think a company like Honest is a really attractive stock now at this point in time, right? Even a stock like Fubo. Like Fubo, think about it. Like, where are they getting all their money from? USA. Do they have to deal with the tariffs? Do they have to deal with, we're making a product in China and then it's going to get shipped here and we got 100 billion% tariffs to deal with? No, they don't have to deal with any of that, right? Recurring revenue streams, they're close to profits in regards to that company, right? The Disney deal is likely to go through in the next 90 days. And so I like the backdrop for even a stock like Fubo quite significantly. And this one might come as a surprise, Whirlpool. I like Whirlpool. I wouldn't mind starting a position in Whirlpool. And the reason being is, remember what I told you guys about the cyclical stocks. There's only one time to really buy cyclical stocks, and that's when they've already crashed 60 to 80%. When you can get those stocks after they've gone through a 60, 80% crash, it's usually a great buying opportunity, right? And I'll take a risk on basically any good quality cyclical company if the stock price crashes 60, 80%, right? Toll Brothers, another perfect example. Like if Toll Brothers stock crashed 70, 80% from the recent highs, I'll gladly buy Toll Brothers stock and hold it, right? Same thing for a lot of companies, even a Tesla or companies like that, right? Whirlpool, Stock's down 60-80% from the highs. I think it's down, 67% or something from the highs back in 2021. And so there's two ways I could go with the Whirlpool. I could buy shares straight up, or what I could do with Whirlpool is, let's say I was thinking like, oh, I'm going to put $100,000 in Whirlpool. Instead of putting $100,000 in Whirlpool, I could always just do like $10,000 in out of the money call options that expire in 1 to 2 years on Whirlpool. Now that's a risk because let's say, my belief is in the back half of this year, we're going to start to see a turn in terms of the amount of transactions happening in the real estate market. I believe mortgage rates will come down. I believe people will get moving again. And I believe that will just be the start. And then we'll see a big acceleration in 2026 and 2027. The real estate market's been frozen for, 2.5 years now at this point in time. I believe it starts to thaw out in the second half of this year. And then 2026 and 2027 gets back to a normal. And that's going to be phenomenal news for a company like Whirlpool. And so I wouldn't be surprised at all if Whirlpool stock goes to 150 or 200. Let's call it 2 years from now, 2.5 years from now. And so some out of the money call options, that's another opportunity there. So I don't know. I'll think about that one some more. But definitely Adobe kind of takes the cake in terms of just like a perfect situation with the perfect stock. Learning what we've learned from 08, 09, what we learned from this recent situation, right, with the tariffs and everything. And Adobe just seems like one of the most well-positioned companies I can possibly find with financial statements that are absolutely phenomenal. Now, if you want me talking about some more stocks, I gave you guys a lot of stocks. When I did a video 5 days ago, not sure how many you guys got to check this one out, 20 stocks to buy ASAP, emergency, it's like stealing money. That video there, definitely check that one out. If you didn't get an opportunity, check that one out because I went over a vast amount of stocks that are incredible opportunities. I went over what price they're trading at and all those sorts of things. And so, unfortunately, I think pretty much all 20 of those stocks are already up significantly because the market's obviously bounced. But hey, it might be worth you guys checking out that one, okay? Appreciate y'all joining me as always. Thanks so much for being here. If you're looking to apply, join my private stock group, private wealth group, get access to my best courses like Become a Master of Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery, get access to my private Discord chat, access to see the stocks I'm buying and selling my big dog public account each week, right, which is a multi-million-dollar portfolio, access to 1000xstocks.com, the premium software I use to figure out if I'm getting a great deal on a stock or ripped off, all that good stuff. You can go ahead and click the pinned comment down there, fill out a form. And then once you join us in there, you get your Steal private stock group membership card, and then you get your Steal 2025 1000x stocks membership card in the mail, baby. Yes, one of a kind. Much love and have a great day.